all successful businesses will need to be AI businesses, whether or not their core products are AI. All businesses will need to be data businesses, whether or not the core products are data. All businesses will need to be sustainable and responsible.
Welcome to Leaders on a Mission. I'm your host, Simon Leach, and a big shout out to everyone tuning in as we uncover the stories behind the innovators and the leaders shaping the future. Now, today I'm really excited to have Tim Chiang, our partner, co-founder and partner at Myriad Ventures on the show today. Now, Myriad are a US-based VC company, really identifying and supporting groundbreaking startups that are defining. It's really interesting, this. It's like a new paradigm or a paradigm of new industry and innovation, actually. It's really quite broad and pretty unique, actually. And in this episode, we're going to explore Tim's journey to founding Myriad. We're going to unpack a little bit around the investment thesis and some of the lessons learned from building a first-time fund and really some advice for founders navigating today's market and some trends, some enduring kind of trends that kind of hold firm today for Tim and the company. So, enjoy the show. And Tim, thanks so much for coming on today. I really appreciate your time.
Thanks, Simon. Thanks for having me.
No, it's a pleasure. Let me just start with chatting through a little bit around your personal journey. And I'm thinking around, I don't know, maybe some of the kind of moments or milestones in your career that just kind of inspires you to kind of, take that leap and found the company.
Yeah, probably the best way to start is, my background is in engineering. So I spent a good chunk of my career as an engineer working on some very complex systems, and ranging from medical devices to polymer production to aerospace safety and aerospace surveillance. And kind of in that experience, I sort of adopted a very much so a systems thinking approach towards some of these complex challenges. It took me across multiple different sort of stops along my career path, ultimately leading me to the Boston area, where I embarked on a graduate program at MIT, which is sort of a joint engineering and joint management program. And from there, I ended up spending some time at GE Ventures. That's where I kind of got my start and first foray into ventures. What I really saw there was some really exciting stuff. The team there was fantastic, but came away with this sort of nagging question of, how do you capture and how do you measure strategic value that's built and developed through some of these strategic venture investments and startups that are building arguably some world-changing technologies that just need to get to scale. So I went back to school that following semester and came up with a master's thesis idea around how do you measure this stuff? How do you capture this stuff? How do you deliver it? And that led to me joining a couple of different corporate funds, helping them build out their corporate venture capital groups, including most recently, prior to Myriad, Xerox Ventures, and helping to build that practice out. But really kind of undergirding all of that was this question and this thesis, this idea that there's got to be a better way to do this. There's got to be a better way to deliver value to founders who are building the future of energy, the future of mobility, the future of health and business solutions, the future of services. Right. And how do we do that in a better way, in a complementary way to ways that we've seen it being done both on sort of the traditional venture side of the world, as well as the strategic corporate venturing world. And so that's really very much, and I'm just kind of flying really high over here, but very much so my personal perspective, but also shared across the three partners and founders of Myriad, and how it's informed how we've built and structured and differentiated Myriad in a way that culminates in some of these convictions that I've developed in my own career path.
Great. No, got it. And so when did you actually set Myriad up?
Yeah, so we announced early last year the inaugural fund, Myriad Ventures Fund 1, with the initial commitment of a little bit more than $100 million. So we're a fund that is actively deploying that right now in the early stage. So we're just about a year in now. We've made a number of investments thus far, a very vibrant portfolio of just, we think, top-notch founders, the best in the world. Super excited about them and even more to come. So we're just getting started, but we're about a year in.
Okay, awesome. Look, we've got loads to unpack there. I'd love to touch upon, because, it was, as you mentioned, your master's thesis, right, to a certain degree. So a better way, you use the words, a better way of capturing and delivering value, more of a complementary way. What was the problem when you kind of retrospectively look back, and what were you trying to solve with this?
Yeah, I want to be very super clear. We love corporate venture groups. We love strategic venture investments. It wasn't so much that there was anything wrong with that. It was like we saw that there was probably a missing piece, a missing component, a missing adjunct to sort of both the strategic venture model and as well as the financial sort of traditional venture model. And it's sort of, how we've built ourselves to be an adjunct to both strategic focused fund and as well as traditional venture funds. So it's not necessarily us merely having high levels of contact points and introductions for companies, or nor is it just, for us, we really build upon the deep network that we have with a myriad of different corporate groups. Some of them have vibrant and very great venture funds. Some of them are a little more sort of focused on strategic engagements with startups, and that's great. All of that is fantastic. We want to sort of supercharge all of that and work alongside some of the best financial funds in the world. So we really kind of sit in a complementary way to the models that are working, which we think can just work a lot better with a fund that sort of has a perspective that kind of sits in the middle and sits in the in-between. To be clear, we are a financially driven fund. We're a pure kind of a very traditional venture fund, but our model and our network and the way that we operate across our network of corporates and also some of our LPs is really much about getting deep and understanding the strategic needs and the strategic roadmaps and the operational needs of these corporates, some of these being the largest companies in the world. As well as engaging with the startup founders who are building the future of those solutions and facilitating those introductions and connections.
Awesome. So I get where you got the name Myriad.
Yeah, no, that's true. I mean, Myriad is a nod to a number of different things, right? Like some of the largest and most emergent, but also even the most recalcitrant challenges in the world that corporations face today are myriad in their facets. And then the solutions that are going to solve that really benefit from a plurality of different approaches and views. The three partners and myself, Dean and Chris, we come from very, very different backgrounds in our careers. We've got a ton of different experiences, and that we leverage to the benefit of our founders. Right? We can think about some of these challenges from several different approaches. That's augmented by our deep network of industry professionals and corporates who are engaging with these challenges on a daily basis. That informs what we're looking for. That informs of how we think about challenges. That informs us of how we bring those opportunities to the founders that we back and engage with and our partners with. And so that myriad approach, right? It's not being content with, hey, there's only going to be a single solution for this multiple. It's going to be it takes a village to build some of these challenge breaking solutions. Many of which are, as you rightly said, I think prior conversations, it's just hard, especially if in areas of, let's say, deep tech or even in AI, where it requires a lot of resources. If you can align a lot of the partners that can bring and buy down the risks that these early stage startups are facing in a way that escalates the time to market, escalates the de-risking of some of these technologies, and bring to bear these commercial introductions and contacts for these founders, all the better. All the sooner that we can see these solutions brought to market at scale.
So tell us a little bit around, when we think about your thesis or we think about the segments that you kind of invest in, maybe talk us through that.
Yeah, happy to. we're early stage investors. We invest at the pre-seed, seed, and Series A. What undergirds our thesis is really kind of this understanding, this belief that all successful businesses in the future will, even right now, right? All successful businesses will need to be AI businesses, whether or not their core products are AI. All businesses will need to be data businesses, whether or not the core products are data. All businesses will need to be sustainable and responsible. And many of them will be energy businesses, whether or not the core product is or service is generating electrons. Right, we happen to be coming into an age where a lot of these global industries, a lot of these global enterprises are going to have to be many different things to succeed, and all while being even more efficient, all the while being even more productive, all the while being more focused on what needs to be true for their core business to succeed, and their customers to succeed, and their customers' customers to succeed. And that's really going to require some emerging technologies, emerging solutions in the areas of AI, B2B software, and clean technologies. But those are the areas that we're focused on. We're focused on AI solutions, all across the stack. We're focused on B2B software, continue to be focused on enterprise solutions there. And a lot of where I spend my time is in clean technologies, or what we would call clean technologies, but what we really sort of how we think about it is a little bit more broad than clean technologies. We think of it in terms of industry innovations. We think about supply chain logistics, advanced manufacturing. We think about sort of climate impact as, at the ultimate scale. The best way to scale those solutions as sort of being an emerging property of a better way of doing things, a better way of operating your business, a better way of making things and moving things around, right? We think about in terms of real business challenges and solutions where the future de facto way of doing things is also going to result in some dramatic climate impact as well.
Just to unpack a few things there. So it's really about the enabling technologies. Yeah. So really, like some of the businesses you kind of support, they will really be so broad across a number of different industries, right? In terms of where their customers are. But it's the enabling technology that you're kind of really kind of honing in on.
That's right. Yeah. And I think that's also, like, we've got very strong relationships with industry titans across all industries, whether it's in petrochemical space, materials, energy, supply chain, technology, software, logistics. We have a pretty broad reach, and consistently, what we're hearing from all of these companies and the execs at these companies is this concern around AI and software efficiencies and clean technologies and climate impact. So it is very much a cross-cutting thesis that we're focused on, and a lot of what we see, a lot of what we get excited about are some of these enabling technologies. There are a lot of also solutions that are bringing very acute solutions to acute challenges as well, and I think those can be very, very compelling investment opportunities, and some of the best founders in our portfolio are addressing those challenges as well. But what is consistent is sort of this broader and sort of multifaceted approach towards a very broad. We keep using the word recalcitrant and emerging, right? It is very much so across all industries, and so we're not necessarily sector focused. Right? We're not sort of a fund that is really kind of focused on any one particular industry vertical. We tend to think about opportunities that we engage with as a little bit more broader than that.
So I'm just thinking there's a couple of things that you mentioned there, and we'll delve into this a little bit as well. How do you... So it sounds to me like there's a couple of things. You've got these relationships with these titans in industry, which are quite broad across sectors, and that kind of informs your view of the business kind of landscape, maybe challenges they have, where they see the business, and then you're kind of linking that back into the world of innovation and how some of that innovation and new company creation can help support them on that journey as well. Is that the one way of looking at it?
Yeah. I mean, the best way we think about it is and it's not just how we think about it, because we've actually seen this in effect, and we're starting 1 year in, we're already seeing a ton of validation points on this model is working, and it's resulting in a lot of value being created for our founders. We think of it as a flywheel effect, right? A lot of our access to corporates and bringing startups to the executives that are charged with resolving some of these challenges that they're facing, very existential challenges, and how to navigate the very rapidly transforming landscape that they're facing in areas of AI and software and climate. Those are areas where, with across our executive advisory board and strategic advisory board, which is populated by a number of former and current C-suite execs, and even beyond that across our network, we can open doors. We're not just sending over an intro or blind intro, where we are actually being able to open some deep doors deep within a lot of these corporations that can benefit these startups in the form of commercial engagements and actual commercial contracts. These are doors that can't just necessarily be open cold from the outside. It really benefits from a deep relationship and a proven track record of value being delivered. So that's how we think about it. But then the more we do that, the founders really benefit from that. And I will add, we don't necessarily only do this for our companies. We're happy to, when available and when appropriate, we do so for founders that we think highly of, not necessarily only in our portfolio. But that kind of creates more opportunity for access to some of the best founders in the world. And I think I keep going back to, you can take money from almost anyone if you're really, and we can touch on this a little bit as well, but venture money is probably going to be the most expensive money that you take as a founder. How do you make the most out of it, right? And then for us, I think we're a multiplier effect for the money that you take from us, because I think we can really open up a lot of channels that, to the benefit and to the extent that that's welcomed from the founders, really benefit their progress in commercial traction and de-risking their technologies. And then that it's a virtuous flywheel effect that can be resulted from there. And we're sitting in the middle. We're just doing what we know to do, which makes a ton of sense, because I think the founders want these connections, these corporates want these engagements, and at the end of the day, we hope that it results in just fantastic companies being built and a ton of value being infused into the ecosystem.
Yeah, that's great. And something I always hear a lot of, and one of these real challenges for founders, certainly maybe technical founders as well, early on the journey, is sometimes having the access and the strength of being able to kind of drive some type of partnership or some type of commercial kind of relationship. That's probably challenge number one, right?
It can be a big one, right? There's a million things that a founder has to worry about, and yeah, that's definitely one big one. The best founders think well in how to navigate those waters. The best founders think well on how to partner with good partners and a good team that can surround them and really help them break through some of those barriers. The Myriad model, we make those connections. We connect startups with stakeholders and across all funding stages, right? We provide more than just financial support. We open those doors. We offer those strategic guidance, and a lot of that's enabled because of the network that we have, this vast industry network. We enable startups to gain insights from these industry leaders, helping them navigate and think through some of these challenges that they may not have prior experience in thinking through. We give these corporations sort of early access to these trends, but these founders are the ones that really benefit in many ways, and helping them think about those opportunities and engaging those opportunities that we serve up and we help kind of set up for them. And form strategic roadmaps on both sides. I think we serve the ecosystem as a connective tissue that's really welcomed by the industry. And then that's really kind of helped by, again, like the myriad approach that we come with, decades of expertise in various industries and investing in operations and technology. Our team really comes in as a true partner for our founders. And just to give you some sort of high level sort of proof points, right? This is not just sort of this thesis or white paper that we've kind of put together. We've proven this out. We've proven this out over the past several years, but just in the past year, this Myriad model is working. It's sparked over 350, almost approaching 400 connections now between over 100 startups and almost 200 corporations, right? It's resulting in several dozen proofs of concepts that resulted in about a dozen commercial contracts, just in this first year of starting out. So we're just getting started. But we're bringing a ton of value. We're facilitating a lot of these connections with these founders, and they're benefiting big time, especially in this environment, right? Like, you got to do more with less.
Yeah, absolutely. Resources are always, you've got to do more with less. Yeah, this is the challenge. This is why sometimes when you look at startups and you look at these teams, I mean, they were operating along, you've got to do more with less to start with, but it's now magnified almost, isn't it, really? It's just like resources are light, aren't they, right? Just in terms of a kind of numbers of people in the team, right?
Yeah, I think so. I mean, I think resources are light, but I think you're just going to be a better business as well by being efficient. Who doesn't want to be more efficient? The best companies in the world are highly, highly efficient. So we want to help drive that and facilitate that as best we can.
Yeah, absolutely. Tell me, in your mind, when you look at some of the businesses in AI or some of the kind of software SaaS kind of models, and then you look at some of this clean tech world, as it were, different businesses. How do you think about, as an investor, how do you need to think differently when you're investing, say, in the clean tech kind of, manufacturing kind of business compared to AI and SaaS businesses?
Yeah, that's a good question. There's obvious differences, I think, with if you're literally building a physical technology, or that technology is still needing to be scaled up from like a benchtop demonstration to a pilot scale to sort of commercial scale, right? That's all different. The challenges that you face scaling a particular chemistry or manufacturing method from very small scale proof points to now you're actually cranking out product. That's a little different than in software, or some of these AI companies that we're building. But at the core, it's still, I don't necessarily think it's crazy different in the way that we think about it. Because I don't necessarily think in clean tech there has to be a different. I think there are different ways. There are a few different ways to approach it, and I think they're all, a lot of them are pretty valid. For us, we tend to think about opportunities that are a good fit for our fund, in areas where it's gonna the underlying technology can be scaled relatively quickly. And get to commercial sort of success in a time frame that is congruent with our fund's time frame. Now, that means there are probably some really, really exciting and compelling projects that might just not be a great fit for us. And we may not be the best partner for them. And so then it becomes a matter of fit, not like what's best or what a better approach is. But for us, I think we do have a pretty clear idea of what a good fit for our fund and where we can add the most value, given our network, given our expertise, given our experience is. And that's not going to be everything. There's going to be quite a few things that are going to be quite impactful. I don't necessarily believe that climate innovations and deep tech innovations are are by necessity more capital intensive than anyone else, or it takes longer to kind of get to some sort of investor exit than even software. I don't necessarily feel like that has to be sort of this hard baked in rule across this entire segment. I know so because I don't think all companies in our portfolio are like that. We love technology breakthroughs that actually leverage existing infrastructure and existing assets and can really kind of benefit from what we're seeing as an increasing number of service providers and corporates and existing infrastructure owners and operators that are very, very willing and motivated to support and provide in-kind contributions to helping these companies scale. It could be a technology that leverage off the back of what's already been built, such that these founders don't actually have to build it again or build something completely brand new from an infrastructure standpoint. They can really be sort of building upon what's already been established while transforming an entire industry like the energy segment. So we love that. We love the technologies that can really kind of segue existing industries along transformation themes. We've got a couple of companies that really are leveraging those ideas, and we believe can get to market a lot faster than their peers.
Oh, can we dive into some of those? Maybe let's just have a little talk through. I'd love to just ask you about a couple of companies in your portfolio you're really particularly excited about that, that do this. It'd be great to put a bit of color on that.
Yeah. One of the companies that we invested in a little while back was a long duration energy storage company. It's an organic flow battery called XL Batteries. They're based right outside of Boston. Super exciting team, super exciting technology. They're addressing the challenge of energy storage beyond what you would typically see with existing lithium-based storage in durations that are beyond the 4 to 6, 8 hour duration of storage. We're talking about longer duration, 30 hours, 100 hours, even seasonal. But what's unique about their technology is that their charge carrying molecule, right? What they're using as the sort of the building block of their battery, their technology is something that's synthesized from a petrochemical feedstock, right? So when you think about the largest industries in the world, the largest sort of infrastructure and production footprint in the world, it's oil and gas and petrochemical industry. That's the industry that's going to be disrupted and actually transformed when we think about energy sources and generation in the future being more renewable, being more sort of not sort of pegged on to petrol fuels and sort of a consumptive oil and gas model. It's going to be more renewable integration. And what a fascinating opportunity to be doubly transformative and transitional when we think about leveraging the existing infrastructure for petrochemical fuels and energy towards enabling renewable energy integration with the production of batteries versus production of fuels. That's fascinating to me because that infrastructure already exists. That know-how of synthetic chemistry already exists at the greatest scale across oil and gas, the petrochemical industry, even pharma, right? And so that is exciting because what needs to be true to scale a benchtop demonstration to a pilot demonstration, which XL is at right now, and kind of doing pilot programs that can lead towards commercial scale batteries. A lot of those partnerships, a lot of those partners, a lot of those industry experts and know-how that exists, and they're very willing to and very excited about partnering with a company like XL.
Yeah, awesome. I actually spoke to Tom.
Yeah, it's great.
Tom, isn't it? Yeah. I mean, wow. So just a couple of things about that. I'm just curious. With the lithium, it's quite an expensive material to use for this as well. Is it a kind of, I mean, you talk about energy efficiency, but is it also cheaper?
Yeah, there's a couple different ways to think about it. I mean, I think lithium batteries are here to stay for a lot of like mobility applications, power applications. For storage and long duration storage beyond like 4 hours and maybe even up to 8, I think there's probably a better way to store that energy. I think the challenge with lithium is that you don't have energy and power decoupled. You gotta. We think about energy storage in terms of like what the most quintessential example of that being sort of pump hydro, like the reservoir. It would make sense to have a single dam or a single sort of turbine and a large reservoir if we want a lot of storage. We just want more storage, just increase the size of that reservoir, just store more water behind that dam. But with other battery technologies where you don't necessarily have that decoupling, you got to build a lot of these tiny little reservoirs and tiny little dams. You got to couple all that together. And so there's an engineering cost that doesn't actually benefit from economies of scale. Before XL and some of these what Excel is building is it's a redox flow battery architecture that does actually have a true decoupling of those two things, energy and power. There you can have a real simple sort of analog to or electrochemical analog to pumped hydro. So that's what's exciting to us. Lithium, we're really excited about lithium batteries as well. We're also investors in the industry, which is a direct lithium battery recycling company. They're great, awesome team down in North Carolina. They just raised a pretty sizable Series B and also took down a pretty fantastic, it was a $55 million DOE grant for battery recycling. So yeah, we think there's a lot of different approaches here for the energy of the future, and we're rooting for the entire tide. But for battery storage, for energy storage, long duration, I think we're super excited about what Tom and the team over at XL Battery, what they're doing.
Yeah, no, awesome. And so when you talk about this big transformation and the way that these energy markets and certainly the storage markets are going to evolve, what would be your kind of, when you're reimagining the future, as it were, what kind of impact do you think this will have or could have on our, on the industry?
Yeah, I mean, so quite a bit, actually. I think beyond just sort of the easy and obvious answer here of enabling renewables, which are obviously just, the challenge there is being that they are intermittent. They're not always on, right? And I think that's what a lot of people kind of see the challenges of, you're going to install a lot of these intermittent sources. You're going to have to just inherently overbuild, right? But if you could level that, if you could store energy when it's produce over demand, for times where you do have more demand than supply, then that makes renewable energy integration a lot more feasible. But I'll go back to our thesis in investing in climate technologies, investing in industrial innovations. A lot of it is around the broader theme of business resiliency, right? At the end of the day, the reason why we believe that the future of good business is going to be AI and software enabled, data informed, and clean and responsible is because of resiliency and many other things that positively impact a corporation or a company's bottom line, right? And so when we think about energy resiliency, I think just anecdotally, I'll bring up another company that we invested in, Myriad. It's a very early stage company out in California, but they're just, despite their early stage, they have been doing incredibly well and bring a ton of impact to local communities that are adopting solar and renewable energy infrastructure for their energy needs in a way that has proven to be quite resilient for these businesses. When Hurricane Helene hit, a lot of local communities were just ravaged and the grids were down. There was a business that stayed on because of a project that Myriad enabled for just rooftop solar in a local business that was able to be energy independent in the time of sort of a grid shutdown. So when we think about, and that's just one case, right? But it can be easy to kind of extrapolate from that and start to imagine, okay, what would it look like for a future where climate challenges and disasters, as we're seeing live now in the U.S. West, and in the face of just emerging challenges and disruptions, what would need to be true for a more resilient and continuously sort of operating business in the future, to navigate and adapt and respond to disruptions in supply chains, disruptions in energy, disruptions in a myriad of different things. We think that those solutions are enabled by some of these undergirding technologies like Excel, like Myriad, like the industries, like Syrah, that really bring a level of ability that for these companies to navigate those disruptions in supply chains and disruptions in global politics, geopolitical sort of challenges that can be existential to a lot of these companies. They don't necessarily have to be. So that's what gets us excited. That's where we think there's some fantastic opportunities to back founders who believe the same thing as well, and as well as the companies that we partner with who are looking for these solutions to partner with.
Yeah, absolutely. And these are trends, that are going to continue as well, right? I mean, they're not going away anytime soon,
Unfortunately, it doesn't seem like that.
Yeah, absolutely. Tell me, when it comes to founders, is there, I'm curious because I know you look at a lot of businesses. You probably invest in I don't know what percentage. I don't know how many you look at during the course of the year and what percentage you invest in, but it's probably a very small amount, as it were, in terms of that pipe. And I'm just trying to get a sense of, like, for you, what is it about these founders that you invest in that they have to demonstrate to you for you to invest in them?
Yeah, you're right. We see a lot. We have the good fortune of being able to choose the founders that we end up working with. And I'll again say that there are not just probably, but there are far more fantastic and amazing and world-changing founders that we talk to, and for a number of different reasons, it's just not the right fit for a fund. But our portfolio comprises a cross-sectional segment of some of those best of the best in the world founders that we get super excited about backing and supporting. And all of these founders are just best in class. All these founders understand the technology better than anyone else, the technology that they're building. All these founders really deeply understand the market that they're addressing, and are surrounded by experts in those industries. All these founders are just have this uncanny ability to navigate through the millions of challenges that they're going to face. There's a million ways in which these companies can get killed, and they're constantly navigating that. They're constantly steering their company and their teams around these challenges and aligning with partners that can help them as well. So collaboration, just intelligence, the ability to convince the best of the best talent to work with them. It comes down to the team in so many ways. Obviously we spend a lot of time looking at markets. We spend a lot of time digging deep into technology. All those things have to be true. It has to be a very compelling market environment, market opportunity for us, and we think a lot in terms of how can we actually help these companies as well when it comes to market. And then technology as well. It's got to be differentiated. It's got to be very defensible. It's got to be very compelling. And our companies are just technology enabled. They're all building upon some very novel and amazing technologies that they've developed, either serving in the lab or in those spaces. But team we spend a lot of time there. Our team has a lot of experience working in startups and also working in some of the largest organizations in the world. And I'll be the first one to say, like, even if you're not even in the largest organizations in the world, it still comes down to the team. You could be a Fortune 100, Fortune 50 company, and it still comes down to the team. You could be a 3-person startup, it still comes down to the team. And as you scale, the importance of building the best team is a very, very big thing.
Any advice for founders about that then, around, like when they're on that journey and their trajectory and they're going from 3 people and it's about building leadership teams and trying to transition a little bit and add some breadth, anything that you would advise them to kind of do to have success?
Yeah, that's a tough one because I think for every company, it's going to be a little different, like the challenges that they face. They're going to need to hire for the needs that they have immediately, but also into the future as they grow and scale.
Well, on that point, how far, this is always an interesting point, right? You're hiring for the future, but for now. So how far ahead should you hire? Because it's a different type of person sometimes. Your needs 3 years out to what it might be over the next 12 to 18 months, as it were.
Yeah, I think it still depends. I think in general, I think we sometimes you hire a little bit ahead of your need. Sometimes you may not want to do that, but a lot of times for the right person, you may need to. And those roles, generally probably more executive type roles, you may need to stretch a little bit. But it also just depends. Like some of the earliest startups that we have, really early stage. Um, I think where a lot of these companies go wrong is when they try to scale a little ahead of their, a proof of product market fit. So they got to be very careful. Um, but yeah, I think ultimately it comes down to just get the best people to join you and see your vision. And sometimes that does look like hiring a little bit ahead of need. Sometimes.
Absolutely. And I know like every business is different, and there's different stages. But I suppose as you look ahead to this year, what are maybe some of the one or two biggest challenges that you think some of these founders face going into 25, as it were, or as we progress through 25, I should say.
Yeah, I mean, I think we're still going to see a market that's going to reward commercial milestones and metrics. I think we're still going to see in some segments that outside of AI, some segments that are still a little tight on capital availability. But even if you were an AI startup and there's a lot of money around, you would want to be efficient and you would want to hit commercial milestones as fast and as efficiently as possible. And so I'd go back to kind of what we're all about is in stretching the effectiveness and sort of what you can get in terms of milestones and proof points and metrics with the network and the partnerships that you align with when you partner with Myriad Venture partners, or you partner with folks who can really supercharge your go-to-market, or supercharge your commercial introductions and contacts and sort of be a force multiplier for the money that you bring in on a venture round. And so I would focus on that. I think that 2025 is looking pretty optimistic. I think things are going to probably get a little more likely to get better than worse. I don't know, maybe not. But either way, the focus of what we're doing is still going to stay the same. It's really going to be driving efficiency, driving solutions, driving progress and milestones for the companies that we partner with.
Awesome. No, really interesting, Tim. And just I could chat to you all day about this. I really appreciate you coming on and sharing your journey, and then Myriad's really interesting kind of approach towards this. Such a thoughtful, value-added kind of approach. Now, some of the numbers you threw out earlier there were really interesting about how you measure that. So it's been fabulous kind of learning about that, and we'll stay in contact and keep an eye out on some of those companies you've invested in. And thank you so much for coming on today.
Thanks, Simon. Yeah, we think so too. I think we're onto something really, really great here, and love working with the startups that we've partnered with. And great chatting with you, Simon. Thank you so much for your thoughtful questions. I think they're great. Hopefully they would be to the benefit of the listeners. And feel free to reach out. I guess, for the listeners, if you want to learn more, or to engage a little more on some of this conversation, happy to do so.
Oh, no, that's awesome. I was going to just thank the listeners, just for tuning in. No, it's great. Myriad, a relatively new company, so it's brilliant to bring the bring the vision and the journey onto the podcast. And to all those listening, we'll see you again next time. Thanks for tuning in.